I think it was a really great perspective that it gave me of actually being in the investor's shoes, right, first, because I was able to invest, and I intentionally invested with a bunch of different people in different geographies. I mean, one, for diversification, but two, I wanted, especially once I got it in my mind, like this is what I want to do. I wanted to see how other people operated, and I wanted to be able to take what I liked and leave what I didn't. And so
you found the Real Estate Law Podcast. Because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. If you're a real estate professional or looking to build real estate expertise, then welcome to the conversation and discover more at realestatelawpodcast.com.
Welcome to another episode of the Real Estate Law Podcast. I'm Jason Muth. We're here again with attorney broker Rory Gill from Next Home Town Real Estate and Urban Village Legal in Boston. And we have an amazing guest. We have Kent Ritter on, and Kent is a former management consultant. He's a startup owner. He's a corporate executive turned full-time real estate investor and operator. He's got a lot of stuff going on, a bunch of syndicated deals. He's a big proponent of financial independence and, working toward, keeping your time as valuable as it is and, moving away from W-2 jobs. I'd love to hear about what's going on, how he was able to do that in his career, as I'm sure a lot of you that are listening are working toward that. And he's coming to us from Indianapolis. And we love people from Indiana, so we want to welcome him to the podcast. So, Kent, welcome.
Awesome. Well, hey, that was a great introduction. Thanks so much, Jason and Rory. Thanks, you guys, for having me on the show today.
We should welcome Rory Gill as well. I didn't welcome you, did I?
No, you skipped past me today, but that's okay. We're going to, jump right into the theme of the day, which is...
Kent welcomed us. Well, Rory and I are here all the time. So, but your home is now our home.
Yeah, I was going to say, what we were talking about before the show, though, is that Midwestern hospitality. I couldn't help it. I saw Rory sitting there. I had to say hi.
We did say that beforehand. I mean, the Northeasterners, I think, were a little jaded and get right to the point. And the Midwesterners, different way unto yourself. And
we got more time,
Does everything take longer, or everyone just takes longer in the Midwest, or everyone just slows down a little bit?
I spent a lot of time working in the Northeast, so I can compare. I mean, definitely just a slower cadence and rhythm of speech, talking, and think a little more the relationship side. Way less straightforward, especially as you go north in the Midwest. It's a lot of stuff happens behind the scenes, and so
Does it really?
I think the nice thing about being in the Northeast is usually you know where you stand with people.
Rory, that's come up before on this podcast because we do talk to people across the country.
I guess there's an art to avoiding the judgment and the directness, but it's also mysterious to us. If somebody says, bless your heart, up here, we just assume that they're being nice, but that's not true everywhere else.
Yeah, that's the classic Southern, get the hell out of here.
I got to introduce that into my vernacular somehow. I should mention that Kent is also a podcast host unto himself. Kent has an amazing podcast called Ritter on Real Estate, which you could find across all the podcast platforms. You can find it on his website, kentritter.com. He has litany of amazing guests of all different types in the real estate world. Let's start there. What's it been like hosting your podcast? I mean, we can compare some notes.
Yeah, it's been just an incredible experience. So I guess, by the time this post will be well past, but we just had our 100th episode, and that was a cool milestone. And over the past 2 years, the amount that I've learned is just incredible. I mean, the cool thing is, right, is you get to talk to, and I hope I fall in this category, you get to talk to successful, interesting people all the time. Right. And that's what I love about it. Is my network has grown so much. It's grown nationally because everybody I talk to is a successful person in real estate in some way. And so it's been very impactful for my business, and it's been a lot of fun. And it's honestly just helped me to get out of my shell and just be comfortable putting myself out there. That was, I had it on my list of goals in 2019 to start a podcast, and I didn't start it until April of 2020. Because when COVID hit, I didn't have any excuses anymore. I was sitting around the house. I was I can't talk to anybody. I can't go anywhere. So I might as well start a podcast. But the reason it took me so long was really just all my own limiting beliefs of, what do I have to say? Who's going to listen to me? And, all that good stuff. And lo and behold, a couple of years later, we average about 20,000 downloads a month. And, the growth has been pretty incredible, and the feedback has been incredible. And so I think it taught me, and this is what a mentor of mine told me when I was starting was, look, it's not about, there's already a million podcasts, who's going to listen, right? And it's it's not about, necessarily what you're saying. It's about how you say it. And there's going to be people that resonate with you that don't resonate with me, and vice versa. And you may say something in a way that really hits home with somebody and changes their life when I would have said it a different way and they wouldn't have been impacted. And so that really was like, when I started thinking about it that way, that's really what got me off the fence to say like, yeah, I can make an impact. I can get out there. And like you said, one of my huge passions is financial freedom, because I just, it's too many of us tethered to jobs that we don't like. And there's different ways of doing it. And I thought I was a savvy investor. I was a finance major in college, I with a focus on investments, always an active stock investor, but I had no idea about the world of real estate investing and how impactful that can be. So when I found out about it and I started realizing the benefits of that, I was like, man, I got to start telling more people about this.
Mm-hmm. Yeah, it sounds very similar as to why we started this, which we did start this one also in 2019. And we took a hiatus after we had our daughter, but we did 8 episodes and then we hit the wall of oh my God, we have to deal with the newborn now. They say if you can make it past 8 episodes, like you're more likely to succeed with a podcast. And we were right there at that precipice of success or failure. And then once we rebooted it, and we've been reaching out to a lot of people like yourself and hearing from other people that want to be on the podcast. I think I have the same experience that you just shared, being able to talk to all these great experts across the country, building a network of folks, hearing from people. We hear from people all the time. I heard from a high school friend of mine yesterday talking about information that, he was getting off the podcast, which, is great because we're impacting other people as well. We're not just talking to ourselves. And you just put it out there. You find an audience and, hopefully they'll stick around. And, here we are. I mentioned to you, I don't know what number this is going to be. I think it's like 56 or 57 for us. Pretty committed to it. And, we love hearing from people like yourself do things very different from what we do, here in Boston. And it helps us expand our network. I mean, Rory, you've had people, come up to you and talk about the podcast, at least the Real Estate Law podcast. And what's the feedback you've gotten about that? It
just kind of grabs people's attention, and it's amazing that people are listening to it. But I mean, it's kind of shaken all the assumptions that I've made. I mean, we've kind of taken our path toward investing, and we started with basically small unit short-term rentals, but talking to people who are active in different spheres has really kind of made me think about what else can we do that's bigger. It's given me the confidence that it can be done, even though what we've done has felt pretty ambitious. We can see that there is a lot more that can be done. And then we've had a lot of innovative ideas that would have escaped me. So my perspective is certainly broadened with different regions of the country, but also different types. I mean, we talked about industrial real estate. Today we'll be talking about, larger syndications, just different strategies that really haven't been on my personal radar. And, I work in the business, so I feel like I should know all this stuff, but there are a lot of people out there who are finding creative ways to kind of break free of dependence on a job and also just kind of find something that they're passionate about within the real estate space.
Yeah, I think that's one of the cool things about real estate is like there's 1,000 different ways to do it. Yeah. You can figure out your own special mix of how to get it done.
And it's just not taught in colleges. Like it just isn't. I mean, it wasn't when I was in school. I don't think it is today to the level that a real student of the game can get it. Because I mean, a lot of college kids, they're smart people, but they're, 18, 19, 20, 21, 22 years old. I think there's a little bit of life experience you have to see as a real estate investor. And I'm sure you've encountered this with some of the people you've spoken to on your podcast. You've probably been open to new opportunities as well that you weren't aware of, or, a new topic or a new way that you can invest in something just by hosting Ritter on Real Estate.
100%. Because like you said, I do multifamily, right? So I focus on a pretty specific niche, like 50 to 200 unit properties within the Midwest where we can add some value to them. But I've had people on the show that like buy land, flip land, or we just had a woman on who does short-term rentals and vacation markets. Like that was really interesting because I don't know much at all about Airbnb and how that works, or note portfolios, or just everything.
Yeah, I think it's probably about picking a niche and specializing in it, running down that road. And I really want to hear more about your 50 to 200 unit apartment complexes and whatnot. But can you take us back to just the why behind your doing all this in the first place? I read a little bit on your website as to what the motivation is. We talked a little bit about financial independence, but can you dig a little bit deeper into, what set you down this path?
Yeah, what originally set me down this path was my family, a very personal goal or agenda, right? What is how I started. And then as I got into it, it kind of broadened and become this larger thing. But really it was about my family. It was about specifically my kids. So like, on my website, I kind of tell this story where I was a management consultant previously. And as a management consultant, you're basically gone all the time. Like I would fly out Monday, fly back Thursday, be home Friday, Saturday, Sunday, and head back out again. Right. And so that was fine when I was single and, young and just having fun. But once I got married, and especially once I had our first child, and we have 3 now, I just had this moment where I was sitting on the plane and I could still very vibrant in my memory. I'm just sitting on the tarmac, like you're getting ready to take off, and Monday morning early, and I'm flying out, and I'm just like, what am I doing? Like I got a wife and a new baby at home, and I'm flying across the country. I'm not going to see him for like 4 days. Like this is not what I want to be doing. This is not the type of dad I want to be. It's not the type of husband I want to be. I want to be around. I want to be present. Like I want to be at all my kids' events, like what was cool. Because now that I've gone down this path, so like as the school year's ending, my kids had these like presentations, and things going on for their classes, and one was at 10 o'clock, one was at like 1 o'clock. Like most people couldn't just be like, yeah, I'm going to make it to all of them, and like I've been able to go to everything, and I love it. That's exactly why I started out on this whole mission. That was about 2015, and then from about 2015 to 2019, I was really just investing with other people. So I was investing passively in other people's deals, right? And through that time, I really just learned the power of real estate and what it can do to your wealth, because I started having these deals that I invested in sell and seeing the money come back, and understanding the tax benefits and all the good things of why we invest in real estate. And then I'm starting to talk to my friends in that time about, well, do you invest in, what do you guys do? And just nobody knew anything about it, right? I didn't know about it until 2015. And I'd been investing, pretty, like I said, I thought I was a pretty advanced investor. And so I really was like, wow, I gotta be telling more people about this. Like, what if I could not just improve my situation, but all the people around me? And I think everybody around me's situation would be improved if they had some real estate in their portfolio. And so, so that was really a catalyst for 2 things. One was starting the podcast, just to kind of evangelize, like, hey, guys, there's a different way. We need to know about this. Like, it's not marketed to us, right? All the marketing is about your 401k and putting money in the stock market. And like stock market's fine. 401ks, I don't think really work. I think we're finding that out now as if we have the first people now really starting to retire off of that 401k. And we're finding that people just don't have enough money. But all that being said, going back to it, to start the podcast, to evangelize about it, and then to start Hudson Investing, which is the business I have now, to actually help people get into those deals and facilitate those type of deals for people, and being able to invest with somebody that knows what they're doing, has the expertise, the infrastructure, and all that. And so really it was that mission of like, gosh, like if everybody could be doing what they loved and not tethered to jobs that they hate, wouldn't we all just be in a better world? And I know that's kind of an idealistic thing, but like, God, wouldn't we all just be a little happier if we got up every morning and did what we loved? And I thought if I could make a little dent in that and start a business and have fun doing it, that was kind of the catalyst of starting Hudson Investing.
Those first couple of years from 15 to 19 that you said that you were investing in other people's deals. So these were like syndicated deals where you were one of the investors. Were you still working in your consulting job or your W-2 job at that time?
I was, yeah. And so I had a little bit of a different path because in 2010, I started with some colleagues. We started our own consulting business. And so we grew that from 2010 to 2015. And then in 2015, at the end of the year, we sold that business. And so that's what gave me some capital. But, most people don't realize, like when you sell a business, like you don't just get to like walk away. They're not just like, here's a check and like, okay, see ya. We had like a 4-year earnout period where we had to stay around to make sure that like the business actually produced income that the company bought. Right? All the senior leadership can't just walk away. I was there. And so I was kind of doing it, but my passion definitely wasn't in it, because my passion was for building the business. That was really my passion. That was like 10 years in at that point. I was kind of burnt out, honestly, with like the client service part of it, just beating my head against the wall, trying to tell people to change. And they're like, I don't want to change. but I had a passion for building the business. I love that. So once we sold that, passion kind of left. And so I was kind of going through the motions at the job, still traveling a ton. That was really when I had that moment, because we had my first daughter in February 2016. And that was really when I had that moment of like, got to figure out a way out of this. Like after that earnout's over, like I do not want to keep doing this anymore. And I had to find the path. And through different ways, networking, I just found real estate and I realized that was the path. And then just as I learned more, I just fell in love with it. And then I'm not one to sit still. And so I decided like, my management consulting experience, my previous business experience really related well into real estate investing and like running these larger scale projects. Because that's what I was doing in management consulting, is running like multi-million-dollar projects. And so I decided that to launch the own business and start not just investing with others, but doing it on my own.
Mm-hmm. I did that grind also for much of my 20s, 9 years on the road.
You get it.
And you do, yeah. Age 22 to 31. And I was looking for the pivot out. I was saying, how do I stop? And how do I do something where I could be a little more local? Didn't get into real estate at the time. I just got to a local job in Boston. Mm-hmm. But yeah, it is tough. It's a grind, especially with a family and a young family. And I bet that, if one of our listeners right now is, that 30-something, whippersnapper moving up in the consulting world, also in the back of their head saying, how do I get out? It's that little kind of angel and devil you have in your head where you like what you're doing, you're trying to be upwardly mobile, but then you're like, oh, this is just a lot. It's a lot of hotel nights. At least when you were in Indianapolis, you can kind of go in any direction, and you're just a couple hour flight. If you're on the East Coast, those West Coast flights back and forth, man, that's a lot.
It was. I mean, I was in Chicago at the time, but I spent 2 years flying back between Chicago and Seattle and Chicago and San Francisco. And so it was like 4-hour flights twice a week, all the time. It wears on you. And to those people that are in that position, like, here's what I want to tell people, because like, it's hard because I mean, these companies are very adept at putting those golden handcuffs on. You get tied up in a lot of things and you have options and you have all kinds of stuff. And it's really hard to walk away from. But like, I've never been happier. I mean, I would 100% say, figure out a way to do it. You can't trade stock options for happiness. And so, I mean, it's definitely worth it, even though everybody's going to tell you you're crazy. I mean, I was leaving like a high 6-figure job, right? I mean, my whole family told me I was nuts. So like, what are you doing? Why would you do this? This is stupid. Yeah. But when you're an entrepreneur, you got to realize like there's not a lot of people that understand you or think the way that you do. And so you can't listen to all that. And my recommendation would be to find some groups of people that are like-minded that can support you, because you're probably not going to find that in your family and your drinking buddies.
Yeah. Rory, do you have clients that are like that are kind of looking for their way out, or people you've encountered, kind of out and about at networking groups and whatnot? It seems like a pretty standard type of person.
I mean, that's a pretty common theme I've had for people who either engage with us as client or people who even approach us looking to become an agent, because it's a change of pace that allows you to be busy, but define your own schedule and to be a little bit local. So, if you're listening to us on that flight to Cleveland early Monday morning, take some inspiration here. There's a way out. It's hard, but there are a lot of other people in a similar position to you. And a lot of people have found their way out and found their own path. Not easy. And it's not something that necessarily you want to do overnight. You want to leverage your W-2 job into something that could, into those first investments and the network that you have in your existing position. Those are valuable assets that you have to leverage. So it's not about cutting ties with your past, but it's about leveraging what you've done to move on.
That's a great point. Those colleagues become some of your best first investors. If you are going into a field where you are looking for investors, those colleagues are some of your best first investors. And I mean, just to the point of, there's a lot of different ways to do it, but you can definitely make it happen.
Yeah.
But like from 16 to 19, I mean, the other thing I was doing was I was building up that passive income so that I could leave. Like, I definitely do not recommend just like cutting ties and not having a little bit of a safety net, right? Like, that's why I was investing so much. Well, with other people, I was taking my money and putting it into these investments so I could generate cash flow, so that I would have some cushion when I eventually left.
Yeah. What are the big points of the FIRE movement? Financially independent, retire early, is to have multiple sources of income. And you just mentioned that's what you're doing. You had some cash coming in during that period where you were part of that 4-year, what'd you call it? The management period.
Burnout.
And you were having money coming in, so you get the confidence to actually kind of make that pivot away once that was done. Can you comment a bit about what you learned from being an investor in syndication deals to then suddenly becoming the one raising the capital for your own deals?
Yeah, I learned a ton. And I think it was a really great perspective that it gave me of actually being in the investor's shoes, right? First, I was able to invest, and I intentionally invested with a bunch of different people in different geographies. I mean, one, for diversification, but two, I wanted, especially once I got it in my mind, like this is what I want to do. I wanted to see how other people operated, and I wanted to be able to take what I liked and leave what I didn't. And so a couple of things really stuck out to me is, communication really matters. And, you're giving the minimum investment in our deals and in a lot of deals of the type, a lot of people that do what I do, it's typically about $50,000. So it's not a small amount of money, And so if you're giving somebody $50,000 or $100,000, it doesn't feel very good if you don't hear from them for like 6 months, and you're like, what is going on? Like, did they take off? Are they still around? What's going on with my money? And I had that happen a couple of times. You just like couldn't get a hold of the sponsor, and it didn't make me feel very good. And so I said, when I start mine, like, I don't want to do that. And so, for example, like, we send out monthly updates on all of our properties. Just here's what's going on. Here's some key metrics, just like a one pager, but just so people know we're there. We didn't take off. We're still working, and let them just have an understanding of what's going on. So I think communication is paramount. And I just think, like, beyond that, like, anything that you can do to make it easier for the investors, just trying to, like, there's a lot of friction in the process, because it's definitely it's gotten more sophisticated. We have investor portals now where people can go in and they can log in, like, create an account, but a lot of those are just a couple of years old. It's definitely not as easy as going on like your Charles Schwab account online, right, and making a stock investment. So any way that we could reduce friction in that process are things that I was trying to focus on. But yeah, I mean, communication was a huge one. The other one was, I was involved in a deal, the second investment I ever made, where the guy actually committed fraud, and the investors, we lost our money. And so it really taught me a lot about, it's kind of shame on me because I really didn't do my homework. I didn't really know what homework needed to be done at that point, right? And I didn't look into the sponsor, and I didn't really vet him. And so it really taught me a lot about, the importance of the sponsor that the sponsor plays, and the importance of just being, I think, transparent and helping people build trust. Helping that trust connection come, I guess. I don't know how to say that, but like just being transparent and being open, and so that people can build that trust, because it's a big leap, right, to make that first investment. And I've seen firsthand how it can go wrong. So I think the importance of the sponsor, and having a good sponsor, and having a sponsor that has integrity and has financial means and has a good track record, right? Those things are all critical, and things that I did not look at all on that deal. The other is I'd been involved in a deal that had a capital call, meaning like they had to go back to the investors and ask for more money because something came up and they didn't have enough money to fund it. And like, that doesn't feel very good either. You're kind of in your mind, like, am I throwing good money after bad here? Like, what's going on? Right. So never want to have that happen. And like, knock on wood, we haven't. But I think the reason we haven't is because I've been through that experience and I'm hypersensitive to it. And so I try to just load extra cash into our deals in different reserves, basically different rainy day funds. So like, if whatever construction project we're doing, I'm throwing 10% on top of that in case things go high. We're front loading a few months of working capital, right? We're putting in, like, interest rates have been going up and down. Well, not up and down, up, right? And so we've started putting just even interest rate carries into our deals, which is just extra cash as rates go up, so that we can, stabilize cash flow, right? And things like that. So we try to be really conservative and put a lot of different cash in our deals in a lot of different ways. So there's a lot of buckets we can pull from in a rainy day when we need them, and we never have to go back to the investors and say, hey guys, we need more money. Those are some of them.
How many investors do you typically have in any of your current deals?
Yeah, it all just depends on the deal size. What I can tell you is the average investment amount is right about $70,000. Our minimum is 50. So we have like a lot of people coming in at 50. And then we have people come in, 100, 150, 200, a few people will come in above that. But it just depends on how big the deal is and how much money we need.
Yeah. I'm just kind of trying to pull some questions out, because a lot of people probably listen saying, I hear so much about, wholesale deals and syndication and, being part of these investments, but I don't really know where to start. So they're probably the same questions everyone else asks. What do you think is an average amount of time that somebody's going to have their money in one of your deals or a deal of this nature?
So I tell people, like, you should only invest money that you aren't going to need in the next 5 years. Mm-hmm. Right. So most of our deals all of our deals have sold before 5 years, but I just try to tell people, like, we always underwrite them in kind of a 3-year, what's a 3-year hold look like? And then what does a 5-year hold look like? And so the 5-year numbers are always lower than the 3-year because we usually have a big bump at the beginning. And then we're pretty conservative with our like organic growth. So we'll grow rents, 3% or so over time. Yeah. The answer is I tell people you need to have money that you're not going to need for the next 5 years.
Yeah. We've done a couple of these ourselves, like where we were investors in them. And, I think we learned a couple of things along the way. You definitely touched upon communication. I can think of one of the deals that we did with good communication and one with not as good communication. I did something unrelated to real estate where there was a Facebook group of investors afterward and the whole thing went sour and it became ugly on there. So you can imagine the perils of social media. And when you empower a group of a couple hundred people or so who put some money into something, and then when it goes under, they all get angry. Noticeably.
I imagine.
Yeah. I'm thinking back, and there's definitely a couple of things that I would do a little differently if I were to go into a deal like this myself. Again, one thing that I think we would do a little differently was the kind of the source of the funds. So I think that we invested and we were pulling money out and carrying interest on the money because it was coming out of like a HELOC or something.
Yeah.
And I don't know if I factored into my calculations, the interest I'd be carrying for the duration. Do you think that your investors are looking at it with that level of sophistication? Like, do they have this money sitting on the side that it's earning 0.01% interest rate in a savings account? That's why they're investing with you? Or are they pulling money out of a HELOC or a cash out refi, parking it with you? Like, where do you think the source is coming from?
I think a lot of people are pulling it out, just from conversations I have. A lot of people are pulling it out of savings accounts, out of CDs, annuities, things that, maybe they thought were going to be good. But I think a lot of people were just parking their cash and they didn't really know. Again, they didn't know about this option, right? And they're like, well, I don't have any more money in the stock market. Don't really know where else to put it. And so I think a lot of people are coming out of those type of accounts. We have a lot of people that invest through their IRAs, their self-directed IRAs, as another primary source. But, and I don't know the source of everyone's funds, but I don't know if people have invested with a HELOC or not. Yeah. I think that, you definitely got to factor in those interest rates.
Yeah. But just by bringing all those up, that if you're listening to this, think about all the different ways that you can tap into capital if you want to invest in a deal like this. I know Rory was about to say something.
No, I was going to say, this is a conversation. When we talk to different people with different investing strategies, there is a kind of a big gap between kind of active investments, the person who wants to go out there and swing a hammer and actually build a property themselves and kind of feel that appreciation, the cash flow that's resulting from that, versus the passive investor who would be getting involved with syndication. And I think they're pretty self-evident as to where you are. But I wonder if you ever have experience with people who are excited to partner with you and then actually are looking to have more of an active role and feel like either they're not being communicated with or is a different path if somebody's going to go in and be a passive investor.
So yes, I think that does happen, right? I was in that position, right? When toward the end of my passive investing, I was doing it because I wanted to learn how the active guys do it. I try to be upfront with people. I let people know. I was like, hey, I'm investing with you, but like I also want to learn from you. Mm-hmm. Some people were like, cool. Others were like, nah, not for me. And so I think if that is the angle you're approaching it with, I think just be upfront with the sponsor and like let them know, because, I think I'm just going to be completely honest. Here's an honest moment where I think what deal sponsors like me hate are like the people that come in with 100 questions and want to invest $25,000, and it's like you spend so much time. And it's like, I get it because everybody has to start somewhere. And I'm grateful for every investor, but I think you just have to, as an investor, be mindful of kind of where you fit in the broader ecosystem, because that's going to be a turnoff to people that are running the deals. If you're if you're a very small amount of the money, but monopolizing a majority of their time, 100% you should ask questions. I just think be thoughtful about it. Like I've just had a couple of times where I think people have just downloaded lists off the internet of like all the questions to ask and literally shown up and been like, I have 40 questions I need to ask you. Mm-hmm. I'm like, okay, well, I have a half hour. Let's try to get through as many as we can, but I think it very much is a great way to see if it is something that you might want to do and talk to the sponsor and understand the amount of work. What I try to tell people is like, unless you really love it, because I have a lot of people I talk to, they meet me on LinkedIn or wherever, and they say, hey, can I just pick your brain about being a syndicator? And I say, look, unless you really love the process, like the juice isn't worth the squeeze. Like you can get great returns being a passive investor. Yes, you get better returns if you're actually running the deal, but it's not worth it to me unless you really like it. Because it's also like, you got to judge risk too, right? And there's a lot of risk in taking on other people's money and doing these projects. So I tell people, it's like, look, especially if they have another business or something. Actually, I was just having a conversation with a guy last night who has another business. He's like, I've been thinking about being active, but after talking with you, I think I might just invest with you. And that allowed me to focus on my other business. And I'm like, yeah, absolutely right. Like you should focus on your highest and best use. And if you have another business where you can actively create cash flow, right? And then you can take that money and funnel that money into passive investments, which are also giving you like 15, 20, 25% returns, then you're just multiplying at that point, right? Like, that's exactly what you should be doing. You shouldn't be trying to figure out how to now start investing in real estate too. Like double down and build your core business.
I was going to say 8% returns. You're saying 15, 20. Like you got to get me a link. How do I invest? That's awesome. No, but that is the ultimate. I mean, think about it. If somebody's got $1 million, $1.5 million to park and they can make 8% of that money every year and sit back and go on vacation and work out, like who wouldn't do that, right? If you can cover your living expenses with your investments in the most ultimate passive thing. I think people your example of the $25,000 investor with the long list of questions, like, in my world, I work in a sales environment like, my full-time job. And it's always the smaller clients that have the most questions and they require the most help. A call this week where, we're presenting an idea and then we find out like the monthly budget's about like $1,000 incremental. And I'm like, okay, this really isn't all that much. And it's just a long, it's another 45-minute call. You have to go back and find this out from this other person. And then you have to go set everything up and say that it's just a lot of work, right? For the smaller clients. But, they ask a lot of questions. Maybe it's because it's the only $25K they have to invest, if it is, maybe this isn't the avenue, for them.
Well, right. And I think that's where people need to be upfront too, because a lot of our deals, you have to be an accredited investor to invest. And there's certain criteria you have to meet. I've definitely had a few people, like you go down the path and then it's time to fill out the paperwork. And it's like, cause you actually have to prove you're accredited. Like you can't just tell me and believe it. Then we get there and they're like, oh, actually, it's like, okay, well, just be honest up front. Right. And there's nothing wrong. Like everybody's got to get started somewhere. And like, actually, I think those people are taking the 25 grand and investing in a smart real estate deal like that. That's a great way to go. You just got to make sure you're in the right type of deal. And I think my whole point is like, I'm not trying to say I don't want to answer the questions because I do. It's just like the respect just has to go both ways. And I think you just have to recognize kind of where you are in the ecosystem, and make sure that.
I totally get it. It's tough though, because a lot of times like you're meeting these people probably at like real estate meetups or online and, you're sharing a beer with them after you gave a speech or you heard somebody else talk or you're all just there to, hear somebody else talk about their deal. And, you're just a few guys or a guy and a woman talking. They're right there in front of you, right? So, you become collegial a little bit. And then next thing it becomes a long list of questions. And nobody knows how much money everyone has at those meetups. You could be showing up with nothing. You could be showing up with, $5 million to invest.
And that's why I try to focus on education in other ways too. Like that's what the podcast is about, right? So my goal is to educate people as much as I can so that when they're showing up, they're ready to invest, right? Because what'll happen with a lot of people is, these investments fill up pretty quickly. And so like if you're not educating yourself ahead of time, then you might miss the boat. On the opportunity. I mean, it happens all the time. And I hate to see that, but it's always a first come, first serve thing, and it's just, maybe that's like the right lesson to the listeners is take the time to educate yourself ahead of time. If you want to be a passive investor, understand how the process works. Like even on my website, kentritter.com, here's the plug. I even have like, for new investors, like here's terminology, here's how it works, here's frequently asked questions, like trying to front load that so that people can come in and be educated and feel confident in what they're doing.
We talked a lot about, the benefits to the investors that, work with you and the value you create for them. But I don't want to let our time go by without talking about it on the other end.
Sure.
I know on your website, you talk about kind of the social impact that your work has in providing affordable, good housing to a large number of people. And I think that's critically important right now because you can't go anywhere without hearing a story about just how tight the housing inventory is in this country. So I don't know if you wanted to bring up that part of the work that you do and the impact that you have on the community outside of the investor class.
Yeah, no, I love this aspect of it because that's one of my favorite parts about real estate is just the tangible nature of it, where you can see something and you can see where it's at and you can improve it and you can like touch and feel it, right? And you can see the change. So the type of properties that we buy are typically built in the 80s and 90s, so they're somewhere 30, 40 years old at this point, buying from a lot of, I'd say less sophisticated owners who just haven't really for maybe just because they're, poor management or often just undercapitalized, and they just can't keep up with the needs of the property. And so a lot of properties we buy have a ton of deferred maintenance. They have a laundry list of things that need to be done for the tenants, work orders and different things. And the properties are just outdated. Some of them they don't have proper lighting, in the parking lot for safety, things like that. So when we come in, those are things that we come in and we're able to infuse capital and do all these projects and really improve the property, make them safer, make them, modern, make them clean, and just really, I think, improve the lives for the residents. And so people have gotten into social impact of investing in things. And I really think that's what we've kind of always been doing on the multifamily side. Do we make a profit? Yes, of course we do, because that's how we fund our deals and we have to give a decent return to our investors. But it can really be a win-win because I think we really do improve the living conditions for many of our residents, especially on some of the older properties we buy. We're acquiring a property right now that was built in 1945. And we walked the property and there's literally active leaks where there's water coming out of the pipes, in the basement. It's just not termites. There's lots of issues that we're going to solve on that property. We're fixing all that stuff. And so I think it's going to improve the lives of the residents. And so I really like that aspect of it. I think that especially in the Midwest, where a lot of the product was built in the 60s, 70s, 80s, it is older product. It needs that capital infusion to come in and really fix them up. Otherwise, the buildings just are kind of falling down around people.
Yeah. Yeah, and multifamily investing is probably going to be one of the ways that we get out of this housing crunch that we're in right now. It's a vicious cycle. There's no homes for sale. There's nowhere for people to live. People don't want to sell what they have because there's nowhere to go, and prices keep going up and rentals keep going up. And so you're part of the solution. You're part of the solution there, Kent, which is good.
Well, we're doing our little bit here, and then even trying to build new, working with municipalities to actually build new apartments as well. Yeah. And it takes a special skill set. It's not easy to do. And you get a lot of remonstrators that don't want multifamily in their backyard, but I agree with you. I think it is the only way that we create enough affordable housing to get everybody a place to live. The studies I see are somewhere between 9 to 11 million homes short in the US. Mm-hmm. That's tragic.
Yeah, especially for the cohort of people who are in their, prime home buying years and family building years right now that want somewhere to live. Yeah, there's just nowhere to go. This has been really good. You've given a lot of good insight that we haven't heard on this podcast. I'm sure that you think this all day, every day, and you probably talk on your own podcast, Ritter on Real Estate, about these types of topics.
Yeah. But it just bothered my wife about it. she's so sick of real estate. I think.
Does she have dinner with you with headphones on? Listening to
Yeah. She just has a recording. She just presses it. It's like, yes, honey. Yeah, sure. You're doing great. Great job.
Yep. See, I love it. So when Rory and I have dinner, we're both talking about this stuff, right? But I think he hates the list of questions I have for him every single time that we sit down because they're always about all these different projects. I am that $25,000, list of 40 questions person that he despises.
Well, it's my job to answer questions all day, and then I go home and answer more.
Answer more questions, yeah.
And speaking of questions, why don't we get to our final 3 questions, and then we could tell everybody how to reach out to Kent. Our first one is, if you can get on stage for a half hour and talk about any subject in the world with zero preparation, what would that be?
That's hard. So here's mine. I want to and because I've been thinking about this a lot personally lately, is I would speak to, I think, parents, particularly fathers, like, because I got 3 small kids. They're 6, 5, and 3. And I'm just seeing how fast they are growing. And I try to be really intentional about spending time with them and like soaking it all in, because I know it goes fast. And you look around, like you go to the park with the kids, you see so many people are just on their phones, have no idea what's going on, don't know where their kids are, like all this of like, I think my message would be like, we got to wake up a little bit and like pay attention and like be present with our kids, because it literally every person I meet that's older than me is like, oh, it goes fast. It goes fast. And so just if I could really get people to pay attention to that, like while they're in the moment and not regret it, 10, 15 years later, that's what I would like to focus on.
That's awesome. But I mean, like now you're that guy when you see like, the people pushing their 10-month-old on the swing, you're like, oh, it's going to go really fast.
Yeah. It goes fast.
Yeah, it does. I mean, our daughter, she just turned 3 and the photos on Facebook that remind me of when we first brought her home and, my mother held her for the first time. It was like, wow, that was 3 years ago. And I remember that day.
I mean, you're in such a grind it's like the days are long, but the years are short.
Oh man. I say that.
Pull out, you gotta.
And being present, I'm glad that you said that, because be present, I see the same thing. I'm guilty of it sometimes also, but the parents
we all are, right?
We all are. Yeah. It's tough not to be, but being present, and the kids notice it too. They really do. I've been caught multiple times by Cecily, our daughter, where she's like grabbing my phone away from me, or she's like, she knows.
Me too. It's like, I'm not perfect by any means, I mean, literally, it's just like something that I have just been so focused on lately, because like, I'm just seeing like, I think what's really happening is like my oldest is graduating kindergarten. She's going into first grade. I'm like, oh my God, I have a grade school kid now. Like they're going to be moving out.
Yep. Yeah. When do they stop talking to you? TikTok, right?
Yeah. Right.
Our second question, tell us something that happened early in your life or career that is impacting the way that you're working today.
That's a really good one. I would say I've had some pretty big events. One, though, that I think specifically impacts my work isn't necessarily a huge thing, but when I was first a management consultant and like first year out of school, I've always been pretty successful, throughout my college career and all this, and have been recognized and things, and got the job, and I'm just like heads down. I think I'm doing great work. And then like 6 months in, I get like a performance evaluation, and it was pretty bad. Like it was, it wasn't what I expected at all. And I thought I was doing a great job. I'm like delivering on everything. What it really taught me was the importance of communication, which we've hit on a theme, right? Communication, but also just like self-promotion and marketing. Like nobody's going to promote you better than you can yourself. And I think no matter what your job you're in, you got to make sure people know the things that you're doing and the good stuff you're doing, because basically it was kind of like we talked about communication earlier. We don't hear from somebody. Like I just wasn't focused on giving updates. Really, I was just doing the work. I wasn't focused on telling people about what I was doing. And there was this impression that I really wasn't doing anything, because that's what happens when people don't hear from you, their minds go to a negative place. They think, oh, nothing's happening, blah, blah, blah. And so it just really taught me, I was really good at getting people promoted later in my career. And I would coach them on how to communicate and self-promote and how to do it tactfully. And I prided myself in that and being able to get people promoted. And it was all really just based on that. It was just about, you can be doing the best job in the world, but if nobody knows about it, then it doesn't matter. And so just make sure that, just make sure you're advocating for yourself, I guess, is the point.
It's the fine line, right, Rory? I mean, like we're trying not to be too self-promoting. And I think that's why we try to highlight people on this podcast and not us.
But assembling these people is really the value that we're adding also for the podcast too. So I'll take it.
Super difficult to promote yourself with the microphone off. I'll add to this also. Like we're going through diversity training right now at work. There was a topic came up about introverts and extroverts, and encouraging managers to try to give as much floor to introverts as well, because the extroverts can take over a sales floor, they could take over a meeting, and an introvert might feel like they don't want to contribute when they might have great ideas to contribute, but you have to give them a floor to be able to contribute. And I'm sure that you probably work with people that are both introverted and extroverted. Both of you do, and it's important to kind of hear from them both.
100%. And you may not believe this, but like I'm a natural introvert. Like after this, I'm going to go sit in a dark room for an hour and recharge. Yeah. But I really had to learn to be more extroverted, and I'm passionate about what I do. I love talking about this stuff, so it's easy. But like, I think that's really what I was one of those introverts, and I wasn't self-promoting in that way. And I had to really learn that skill set.
Yeah, the podcasting is a great way to do that, though. And like, I would have never guessed that, Kent, just from this conversation and from what I've seen online. I mean, like you host. Are you hosting meetups in Indianapolis? Is that your meetup?
Yeah, I host a meetup every month. Yeah.
I mean, like introverts don't do podcasts, video podcasts, appear on other people's podcasts. Host meetups. And if you are one, which you just said that you are, then you're doing a good job in forcing yourself to do the things that are external.
Yeah. I look at introvert and extrovert as like, as energy flow. Like, cause my wife is the extrovert of like all extroverts. Like she always wants the spotlight and I love her for that. And that's why we get along well, cause I give it to her. Right.
Yeah.
And, but like she could be in the spotlight all day and it actually just adds to her energy and just feeds her. Right. For me, like if I go and I speak on stage, like, I don't want to talk to anybody else for like 3 hours. I want to go like hang out in my room. After that, it's like, I really do. It drains energy and I have to like recharge. And that's kind of how I look at introvert, extrovert is like, are you getting energy or is it taking energy from you?
Yeah, that's so powerful. Our final question for you, tell us something that you're listening to or watching or reading these days. Could be anything in the world.
Yeah, well, I warned you guys before this. Like, I'm definitely not the hippest person in the world at this point. With my 3 small kids, like, I watch a lot of, like you said, like CoComelon and other things. I would say my wife and I, we just finished watching Ozark, which is cool. Has been one of our favorite shows, and we don't watch a ton of TV. So when we find one that we really get into, like it's kind of a treat for us. So that's mine.
Rory watched that. I think I watched it, but I fell asleep.
That's how it started, but I've watched some of it. But if I ever circle back to it, I have a few seasons to catch up on. So no spoilers, please. I'll circle back to that in 2027 or sometime, and it'll be great because all the episodes will be ready and waiting for me.
There you go.
But man, it's tough. You got 3 kids. I get it. There's no TV time for you. CoComelon has been on our household for a long time now. Yeah,
like my guilty pleasure is because I'm a big football fan. I like NFL, and so like if. I try to like watch Colts games on Sunday, but I usually get through about a quarter before I have all 3 kids yelling at me to change the channel. So,
really?
Yeah, the kids control the TV around here. That's for sure.
You listen to Pat McAfee's show?
I do. Yeah.
You do? Yeah. He's quite a character. He's great.
Yes, he is. He's quite a celebrity here in town.
Yeah. I mean, I didn't know anything about him until his show came out, and he's an announcer for WWE now as well. Then I kind of dug in, and I'm like, oh, now I get why they brought this guy on. I mean, like, he's a personality-driven kicker for the Colts.
Yep, exactly.
Yeah. So Ritter on Real Estate, that's your Instagram handle. That's also the podcast name. Your website is your name, right? KentRitter.com.
That's right.
So tell us, how can people get a hold of you? Lead forms there, LinkedIn, like what do you prefer?
Yeah, I mean, the website is the best way. That's where the home base. And you can go to the website. You can see deals that we have going on. You can get the blog, the podcast, and there's a form to contact me. There's kind of a general if you want to contact me, or there's a sign up to be an investor. So, and then I would say, to all those newer investors or people that want to invest, like go there, go to our new investor section, check out the terminology, check out the FAQs, like just understanding the language will get you so far in understanding these deals.
That's great. Well, thanks for providing the resource and all the great information on this episode of the podcast. We really appreciate it. Rory, where can people find you?
People can come take a look for me at Next Home Titletown. That's nexthometitletown.com, or Urban Village Legal, urbanvillagelegal.com.
Awesome. So Kent, Rory, thank you both for being on the podcast. We really appreciate it. We'll put all those links in the show notes also, Kent, so people could easily find their way to your website. If you've made it this far, if you could please subscribe or like this podcast, we'd really appreciate it. We also love good reviews. So if you want to give one, I could help you write it if you like. But we read all the comments. And if you have any questions, feel free to reach out to us. You can get to me directly, jason@nexthometitletown.com. And that's it. That's another episode of the Real Estate Law Podcast. Thank you, Kent. Thank you, Rory. Thank you for listening. Really appreciate it. Have a good one. Bye.
This has been the Real Estate Law Podcast. Because real estate is more than just pretty pictures, and law goes well beyond the paperwork and courtroom arguments. We're powered by Next Home Titletown, Greater Boston's progressive real estate brokerage. More at nexthometitletown.com. And Urban Village Legal, Massachusetts Real Estate Counsel, serving savvy property owners, lenders, and investors. More at urbanvillagelegal.com. Today's conversation was not legal advice, but we hope you found it entertaining and informative. Discover more at realestatelawpodcast.com. Thank you for listening.